Surging bond yields are making investors nervous, including, of course, tech investors. But our next guest says he's using the macro and Fed worries as a time to double down on his bullish tech thesis and not panic. Joining us now to talk about this is Scott DeWitt from Wedbush. Scott, great to see you.
Hey, Josh, how you doing?
So, Scott, let me just start right with the big story for investors right now, those surging bond yields. And typically, of course, Scott, you would think that's a headwind for tech, for growth-oriented stocks. Do you think tech stocks, can they work, Scott, against that backdrop?
Probably not. I think that you're going to need, the combination of rates and oil to decline and some, less pressure on the economy to get growth stocks to really start to work again in an environment where rates are rising. So the scenario that in the segment that preceded me in terms of jobs report being strong, the economy remaining hot, I think that's a knee-jerk reaction that's negative. Even though a stronger economy for a long period of time could mean greater growth and greater profits for growth companies, I think just the surprise around that and the pricing end of that initially would be negative. But our view is that ultimately we're closer to the end, very close to the end of the rate increases, and that when we get to the other side of that, whether that's imminent or in coming months or coming quarters, it's going to be a strong tailwind for growth stocks.
So in other words, Scott, hey, it's Julie here. In other words, Even if there's a little pain to come, if you're interested in tech stocks, you should buy them here, wait it out, and then sooner rather than later, maybe, whether it's weeks, months, you will have that rebound that you're talking about.
I think coming out of the pandemic, there was a case being made that these large growth companies were at secular maturity, and you had a very weak year in 2022 for stock performance. And I think these businesses have proven that they're resilient, that the underlying growth is still there, and that 22 was more of a digestion period on the back of the pandemic. And in addition to that, you have an AI cycle, which is just beginning. And so I think that whether we go down first or we go straight up, we're going up because these companies have proven themselves in terms of continuing to be secular growth stories. And we have another cycle that we're in the first inning of in AI. And so we're very optimistic on the group overall across my coverage and internet, as well as the broader tech team at Wedbush.
And Scott, you mentioned there AI, and of course, big tech's been putting a lot of time, effort, and money into that technology. I'm interested, Scott, in your coverage universe, what are the names that you think are best positioned to monetize generative AI?
So I think first and foremost, it would be Amazon and Alphabet. Amazon because of the cloud business and the ability to integrate services into their cloud offering that corporates adopt, that then creates a monetization cycle for AWS, and similarly, Google's compute engine as well in its business. So those two companies, to me, are the clearest beneficiaries of this next coming cycle. But companies that are not, quite as obvious, like Booking.com, in terms of targeting and other features and functionality that can be expanded because of the use of large language models, I think that will come with time. But where we are in the cycle right now is NVIDIA is making all the money. Everyone's buying the chips. And it's going to go from the chips to the cloud providers, figuring out how to monetize the use of those chips. And then in coming years, it'll be more clear and evident which consumer companies benefit. I have the joy of covering companies like Amazon and Alphabet that cross over those two. So it will be the corporate enterprise side of Amazon and Alphabet that show it first. But when you look at the consumer businesses as well, in the latter portion of this cycle, I think you're going to see their ability to monetize there as well.